Whether you're a new investor or a seasoned professional, investing passively in the stock market through exchange-traded funds is a great choice for many people, particularly if you're looking for less volatility, more diversification, and investing in autopilot. In this video, we're going to be talking about 4 high-quality exchange-traded funds that investors in Canada can consider when it comes to investing in dividend stocks. We're going to be reviewing them head to head, and at the end, share with you which one of them we feel are better choices for investors. Let's get into it. The 4 picks for us to review include XDIV, which is iShares Core MSCI Canadian Quality Dividend Index ETF, VDY or Vanguard FTSE Canadian High Dividend Yield Index ETF, ZDV or BMO Canadian Dividend ETF, and XEI or iShares S&P Toronto Stock Exchange Composite High Dividend Index ETF. For this comparison, we are using the BMO Global Asset Management comparison tool that allows investors to easily compare different funds or ETFs using their tool. First things first, looking at the last closing price for these funds, you notice the higher price was for VDY. It was last traded at the price of $42.51, and the lowest price here belongs to ZDV at the price of $19.30. Of course, this price point is not a point of comparison per se, because these are different funds, and we're rather sharing that piece of information for your awareness in case you are planning to add any of these funds to your portfolio. Now, let us take a closer look at these funds and what each one of them kind of cover in terms of their exposure. All of these funds give you exposure to large growth stocks investments for funds mainly in Toronto Stock Exchange, TSX. The objectives for these funds are showcased here. For the most part, all of them are giving you that exposure and possibility of getting a high dividend through investments in these funds. Looking at the inception dates for these funds, you notice that the newest fund here is indeed XDIV. Its inception goes back to June 7th of 2017. And the longest standing fund here is indeed XEI, with its inception going back to April 12th of 2011. One piece of comparison for us is the management fee and the management expense ratio, MER. Ideally, we'd like to see a fund and pick one that has the lowest management expense ratio. While all of these 4 funds have relatively low fees, the lowest fee belongs to XIDV at only 0.10% fee, which is at least half of the rest of the bunch. And when you compare that to ZDV, it's in fact 1/4 of that in terms of the cost. This means that if you invest $10,000 in XDIV, you would be paying a fee of $10 in 1 year, compared to the fee of $21 for VDY, $39 for ZDV, and $20 for XEI. Next, let us take a look at the performance of these funds. First things, we are going to take a look at the return from the common inception date. Given that these funds have different inception dates, we've started with the latest date that all of them had been incepted, and this was for the XDIV, since its inception was the latest of all, and it was back in June of 2017. If you look at the return since then, the best performing kind of fund here is VDY, with a total return of cumulative 73.1%. Just remarkable return there. The second best performance here belongs to XEI with a cumulative return of 65.5%. The third best return belongs to XDIV with a cumulative return of 56.3%. And lastly, the worst performance in that time frame belongs to ZDV with a return of close to 51.9% when rounded up. In the 3-year, we are seeing a cumulative return best performance again, similarly belonging to VDY at 57.7%. The worst performance here among these 4 kind of ETF funds belongs to XDIV with a return of 40%. Although it's still a quite decent return in 3 years, it is definitely kind of lagging behind that of VDY or even XEI, which was showing a 53% plus return. If you look at the past 1 year return, you're noticing that the best performance now belongs to XEI with 23.3% return. Following it very closely is VDY with a 21.3% return. And on the third spot, we have ZDV with 16% return. And lastly, the fourth return belongs to XDIV with only 14.3%. It's still quite a decent return, but definitely lagging way behind that of XEI or even VDY. In this case, if we were to provide some scoring based on these past performances, probably would give the best score to VDY, given how it's been much more consistently on top among these four choices. And following that, we will probably give the best score to the XEI. And probably on the last spot, we would give the return score to XDIV and ZDV as a joint scoring mechanism. Here, you can see more of a tabular returns identified for you here. These are shown actually by annualized return as indicated here. So for example, if you look at the annualized return for the past 3 years, the best and surprise is actually VDY, as we talked about it earlier. In the past 1 year, again, it has the best return. And the past 5 years return, you're showing the best return for VDY. As for XDIV, because it was incepted kind of back in 2017, mid 2017, it's not quite exactly showing the 5-year annual return. Nonetheless, if you look at it since the common inception, we saw how those returns were showcased based on the graph that we saw. Now, looking at the fund data allows us to understand what type of holdings we have and how many holdings are included as part of each ETF. In the case of XDIV, we have 20 different stocks forming this ETF. And if you compare that to the rest of the group, you're seeing that XDIV has the lowest number of funds forming this fund, whereas for VDY, you're looking at 48 different stocks. For ZDV, you're looking at 52, and for XEI, even higher. You're looking at 75 different stocks coming together to form this ETF. Looking at the trailing 12 months yield, which is quite of interest for investors looking for dividend income as a passive source of income, the best and highest dividend distribution yield belongs here to ZDV with 3.82%. Closely following that, we are showing a trailing 12 months yield of 3.79% for XDIV. Following that, on the third spot, we have closely a tie with 3.46 or 3.47% for the returns and distributions of VDY and XEI, respectively. All of these funds do pay their distributions on a monthly basis, which is fantastic for investors looking for a monthly passive income. As for the assets under management, AUM, we are looking at the amount of $723 million in assets for XDIV, $918 million for ZDV, $1.6 billion for the XEI. Although the data for VDY is not provided here, upon our research, we have noticed assets under management of $1.7 billion for VDY, suggesting it has the highest AUM as a result. Lastly, if you look at the holdings, and for example, what are the top 3 holdings for each of these funds? For XDIV, the top 3 include Bank of Nova Scotia, Toronto Dominion Bank, and Royal Bank of Canada. A lot of exposure to financials, which is not surprising because even when you look at the sector breakdown, close to 51% of your exposure is to financial services, followed by utilities, telecommunications, consumer services, and energy. As for VDY, your top 3 holdings are Royal Bank of Canada, Toronto Dominion Bank, and Enbridge. Again, you have a very high exposure to financial services at close to 54%, followed by energy, telecommunications, utilities, consumer services, basic materials, and other. You also have very small exposure to healthcare, industrial services, industrial goods, and real estate. A little bit more exposure and diversified exposure when it comes to VDY. Perhaps not surprisingly, because we have much more stocks forming this ETF as opposed to the XDIV with only 20 underlying stocks. As for ZDV, the top 3 holdings are Bank of Nova Scotia, Royal Bank of Canada, and Toronto Dominion Bank. Again, the top Canadian banks here. And when it comes to sector breakdown, you're noticing about 40% exposure to financial services. Energy is following next at 70%, followed by telecommunications, basic materials, utilities, industrial services, consumer services, industrial goods, consumer goods, and cash equivalents. Now, as for XEI, our top three holdings here include Suncor Energy, Canadian Natural Resources, and Pembina Pipeline, with the sector breakdown exposure mainly being to energy with 33.4% exposure, followed by financial services, telecommunications, utilities, real estate, industrial goods, consumer services, basic materials, industrial services, and healthcare. If you look at the geographical exposure, most of these funds are mainly giving you exposure to Canada, with one exception actually being for the ZDV, whereby you have slight exposure to US and some exposure to emerging markets. And similarly for XEI, you're getting some exposure to emerging markets. Now, while I personally find all of these 4 exchange traded funds great options for investors looking for passive investments in dividend stocks, if I were to pick 2 of them, I would be leaning towards VDY and XDIV. And here's mainly why. As for VDY, it has shown to have one of the best returns over the past several timeframes, including the past year, past 3 years, and even the past 5 years for the most part. On top of that, it has a fairly reasonable fee, which is one of the lowest among the bunch. And on top of that, it also gets a slightly more diversification compared to XDIV, which is why I find it quite an intriguing option for investors. It is also offered by Vanguard, which is one of the best passive investment ETF providers in that sense. Now, my second pick here would be XDIV. And this may sound a little bit counterintuitive, the fact that XDIV was showing one of the lowest performances compared to the rest of the ETFs we reviewed. For me, though, the fact that it has the lowest fee compared to the rest of the bunch is really an intriguing option, and I really give it a lot of credit for that. It's offered by BlackRock, which is a reputable, investment firm. And besides that, one point that I consider is that XDIV is in fact the newest addition to these group of funds. Over time, I believe that it would have time to be able to showcase better returns. Regardless, even the returns that it was showing at this time is still quite decent for a passive investor, and I would be still pleased and happy with that. You're getting exposure to a less number of funds here, with only 20 compared to some of the other funds that we talked about, whereby you're looking at 40 or even 75 different stocks. With that less number of funds, your volatility might be slightly higher, or your returns actually might be impacted by that too. Just think about it. If these 20 specific funds now start doing better, because there's much more concentration and focus on them, your returns are going to be exasperated as a result of that in a positive way. And likewise, if they are now doing poorly, those returns are going to be magnified, and as a result of that, you're going to see much less returns compared to other funds whereby they have these 20 baked into them as part of a larger pie. That's some point to consider. So for me, VDY and XDIV would be my top 2 picks. That being said, I think you can't go wrong with any of the 4. And I do encourage investors who are interested in finding passive ways of investing, really consider all these 4 options, doing their own research, and based on that, deciding whether any of these ETFs might be their choice for them. For me, I do have VDY and XDIV indeed in my portfolio. Recently, I've been getting a little more exposure to XDIV and adding that to my portfolio, given that it's lower price and also slightly higher dividend yield. But following this research, I think I'm quite convinced that VDY is equally an amazing option as well to consider. There you have it, folks. A quick look into 4 high-quality dividend ETFs that investors in Canada can take a look at. Are you invested in any of these exchange-traded funds? If you're an investor outside of Canada, I would love to hear from you and know what other exchange-traded funds are you currently investing in, perhaps for dividend income or growth. Let us know in the comment section down below. If you enjoyed this video and gained something of value from it, please give this video a thumbs up and share it with someone else who might benefit from it. And of course, subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, penny stocks, and crypto. We also talk about ways to reach financial independence. Thank you, and I hope to see you next time.